asking yourself, should I pay off my mortgage early? We did the same thing. So I'm going to walk you through the decision we made and how we got there in hopes of helping you do the same. Hey there, I'm Jen. I am the creator of Modern Frugality, and in 2015, my husband and I started our journey to paying off $78,000 of debt, and we were able to pay it off in 2 years. And after that, we were totally clueless on what to do. We used Dave Ramsey's baby steps to model our debt payoff after. But after 2 years of paying off debt and learning about personal finance, we decided that that wasn't the method we wanted to stick with long term. It was great to get us started in valuable information, but it's not where we wanted to go moving forward. So from there, after we got our fully funded emergency fund, we had to decide, do we want to focus on investing or do we want to pay off our mortgage? And so this is the thought process that led us to the two choices that we made. Yep, it changed depending on the stock market and the economy, but this is kind of our thought process on how we made our decisions in order to help you kind of flesh out which decision you might make. So our journey starts, I guess, when we bought our house, which was in 2017, which if you're doing the math, yes, we were still paying off our student loans when we bought our house. But we were getting kicked out of our affordable rental. We didn't want to rent for another year. We really wanted to buy a house. And so we did. What that led to was we got a way cheaper house than probably I would have chosen if we were debt-free. But we also had a way higher interest rate because our down payment was so low. We went with a conventional 30-year fixed because that's what we could get approved for, and we put 3% down. We actually had to get the seller to cover closing costs and roll that into the loan in order to get the house. So it was a lot of things done wrong, but real estate in our area has skyrocketed, I think like 13+%. So the value of our house has almost doubled since we purchased it, which is crazy. So while we made a lot of dumb mistakes, we got really lucky in buying our house, and our mistakes kind of were washed away with how lucky we got. So in full disclosure, that's how we started out. And so once we paid off our debt, we had to decide, should we pay off the mortgage or focus on investing? So our first choice was to focus on investing. We were in a bull market, which a bull market is when the stock market is steadily increasing and the economy is stable. And we were in the longest bull market in history in 2017. And so we knew that wouldn't last forever, and we wanted to capitalize on that while we could. And even though we had a high interest rate for our mortgage, the stock market return was still at 8+% on a lot of index funds. And so we decided to max out 2 IRAs and 1 401k. And we were lucky in that our expenses were low enough to be covered by one income, and that's why we could max out that 401k. When I lost my job right before I gave birth, we stopped maxing out that 401k and just focused on our IRAs and built up a really good cash basis, a really maxed out emergency fund. But we still weren't focusing on paying the mortgage off faster. We were kind of just riding out that 30-year. Then enter 2020. Come March of 2020, we saw an end to the longest running bull market in history. And we knew it was coming. We didn't know when it would come, but all good things do come to an end. It's kind of life. So we couldn't have predicted 2020 was going to happen. But when it did, we decided to pivot our strategy a little. We kept investing normally through March, and then took advantage of the lower rates to refinance our mortgage. Our original mortgage was with Wells Fargo, and I really, really wanted to get my money out of big banks. And so we finally pulled the trigger when rates dropped in April. So then came, do we refinance and stay at our 30-year or go to a 25? Or do we refinance to a 15? And because we didn't know where the stock market was going, we didn't know if we were going to head into a recession or bear market or whatever negative terms you heard thrown around. So what we decided to do was pivot just slightly. What we did is we refinanced to a 15-year fixed. And so that brought our payment up $200 a month, but it slashed our interest rate almost in half. So we were able to kind of cut our mortgage in half and ultimately promise ourselves $30,000 saved in interest payments. And then because our income didn't increase $200 a month, we had to take down 401k contributions by $200 a month. And by this point, with Travis's job in the airline industry, we weren't maxing out that 401k anymore, but we still had to take some more out of it. And that's because we were no longer in a bull market. The stock market and the economy are not the same. So even though the stock market rebounded pretty quickly, the economy did not. And so we thought the stock market going up could be artificial inflation, and you just don't know. So that's why we just did a slight pivot to balance out our investments a little more. We did a little less. We didn't want to stop investing for retirement because tax advantage accounts are really helpful, even if the returns in the stock market aren't fantastic. So we wanted to keep taking advantage of those, but we also wanted to just balance out a little bit with lowering our risk in our one real estate investment. And so we hope to pay this off and keep it for a long time as an investment property. But we don't plan on paying it off early because I would rather have the liquid cash in my souped up emergency fund and keep focusing on investing than paying off my mortgage, which is now less than 3% interest. Or even saving more money for more real estate for an investment property down the line. We're not there yet, but that's on our radar too. So to answer the upfront question, yes and no. We are paying off our mortgage faster than 30 years because we chose to refinance to a 15, but we are not paying it off sooner than 15 years because we want to free up that cash to be invested in the stock market as much as possible or in other real estate ventures as much as possible. So I'd love to know what you think about paying your mortgage off early. Are you in the 30-year fixed camp or the 15-year fixed, or I'm paying it off in 7 years camp? I'd love to hear what you guys think and what you guys are doing and why. So let me know in the comments. And if you love conversations about paying off debt and they motivate you, inspire you to keep going, then please subscribe to the channel and check out these videos over here for more good, helpful information. And I will see you next week.